And we'll be live in the next, look like 15 to 30 seconds, connecting right now. So
this live is connected to YouTube, right?
yes,
Okay.
and it looks like we are live. So we're good to go. All right, cool. Then let's do this. So last time we left off, we was going through, sorry, let me switch my screens one more time. So last week we kind of just kicked us off, right, Kaiser? So
Yeah.
basically introduction to the stock market, trying to help all those individuals who are kind of new, who see these news and want to invest in the stock market, but there's so many different terminologies being used and there's so much advice that they just don't know where to start, but they know they want to start, but they know they need to learn as well. So that's kind of why we started this, right? To help those newbies or even people who've been investing for a while who just want to kind of educate themselves a little bit more on like some of the fundamentals and some of the basics. So last week we went and talked about pretty much like the mindset of an investor, things you need to know before you kind of get started. And so you could go back and look at that video from last week. But this week we're going to cover more of, now that you have a mindset, is some more information like why you should invest in stocks. Most people invest in stocks for obvious reason. They just want to make money, and that's a very good reason. But there's some other reasons that we're going to talk about today. Once you realize, it just makes more sense of why you should invest in stocks as opposed to putting your money in the bank or putting your money on a mattress, or even maybe potentially investing in real estate or starting your own business. How investing in the stock market is just as good as that. But as always, before we get started, for those who don't know, my name is Terry Clark, aka the Minority Investor. You can check me
Minority
out.
investor.
Yep. You
Yeah.
can check me out on Instagram, minority underscore investor. I've been investing for anywhere 3 to 5 years. Started off as kind of like a hobby, but then I started making passive income, and then it got to the point where I kind of wanted to help others. So, and that's why I'm here. What about yourself,
Okay.
Kaiser?
Uh, I'm Kaiser. Those of you that followed that last week, I did a little introduction of myself. Um, I'm I'm a new investor, and I'm new into the whole investment platforms and investment, everything about investments. But trust me, I feel like it's something that I should have been doing like uh, 20 or 30 years ago. But I'm now getting into it, and it's been awesome. Like I I kind of think I'm growing up in it very fast, understanding a lot about it by virtue of my brother here, minority investor. I have also my own um, Instagram page that I've started, putting up some few informations there for people who are also new to investing to follow. That is Worship and Wealth Relay. So yeah, that's a little bit about me, an investor and also an author. Yeah, thank you.
So Worship and Wealth Relay, like why did you start that group?
Yeah, so the main focus of Worship and Wealth Relay is to get um, people that are in the house of God, or let me say churches. Most of the time, we kind of pray to God for financial breakthrough. And sometimes the financial breakthrough that we need, um, most of them are just around us. And most of them are informations also that God has given out there. But your ability to take your time to access those information is the problem. So Worship and Wealth Relay is basically a page that appeals to everybody in that that goes to church. You're a Christian, you're a believer, and you believe you can still receive more or probably um, get more in terms of making it in your finances. You can probably have your 9 to 5 that you are doing, but beyond that, also receive more. The reason why you want to receive more is not for self-aggrandizement, but to also give more to the community, give more to society. So that is one background of worship and wealth relay. The relay aspect is there because whatever that you are learning, you don't want to keep it to yourself, or whatever that you are receiving, you don't want to keep it to yourself, but give it out, pass it to the next person. It's like having a 200-meter relay race. Okay, you run and you hand over the is it a stick or whatever that they call it
The
to the
baton.
next person, baton, to
Yeah.
run with it. So imagine you are running with it, and instead of handing it over, for most of us, we didn't really have somebody that was really handing over the baton to us very well. They probably dropped the baton on the way. So that means we have to run our own race and come all the way to pick the stick
Right.
and run with it. So if you have the stick in your hand, which is the information we are sharing, the information I share on the page, make sure you run with it and hand it over to somebody else who also needs it, and let the person also run with it well and also hand it over. And if we are all running at a very top speed and we're handing it over very well, we'll finish the race well. So the worshiping of God, when it comes to finances, how does it relate to the things of God? How to make more to support the things of God or the people of God? All these things, how do we hand it over very well? So that is worship and wealth relay for you.
Wow. That's interesting. Yeah. Glad you told me all that information. I didn't put all that together just looking at the name. Just,
Yeah,
like, all right,
yeah.
it's
A lot
just
of
an
people are like,
Instagram name.
yeah, what is the connection between the two, worship and wealth relay? And I'm like, yeah, I need to probably, sometimes people ask me that same question once in a while. I need to break down those informations to them. Yeah. But at the end, it's handing over, um, you know.
Yeah, that's cool because
Mhm,
I mean that analogy was perfect because, like you say, I know in my generation that handing up. See, my father, well, my parents, they're very religious, and I grew up in the church. And yes, I have all the knowledge, the knowledge of the Bible,
mhm,
but I don't have that financial information. Like you said, that baton was not passed on. It was passed on, how to work hard,
mhm.
how to have a 9 to 5. But that information that we know now that we're passing on, that was not. It was definitely dropped. So.
Okay. Yeah. So that's the for many of people that listen to us, that follow us. Most of this informations have been dropped. It was maybe it could be an information about real estate. It could be information about farming, which is a very powerful thing. It could be information about ownership, how to own land, how to, all those stuffs. But that information that need to be passed on so that we can also continue whatever that was given to us. Probably was dropped on the way somewhere. And for somebody listening to us right now, we are more or less like coming back to you to connect that information back to you again. you
Yeah.
know yeah, teaching you that, okay, through the stock market we are connecting you back to that information again about how to make uh this money out of investing. And people are like, I meet people are like, you talk about, sometimes you want to talk about investing, but where is investment in the scriptures? And there's a whole lot. I can give you a whole lot of them, but that is not the focus basically tonight. But tonight, if you really want to, I think I spoke about that last week, but if you follow us, why you should invest in the stock market, you gradually get to understand the direction that we are going and the ton of information that will be passing over to you.
Okay. So as usual, as we always start, even though this is only our second episode, we always start on a site called finviz.com. Is We use finviz because it's visual, and so for
Yeah.
those who maybe understand a little bit better by visually seeing something, this is why we use this website. And so I don't know if you want to go over this, Kaiser, but one of the first things we look at is kind of the groups. And we look at all
Mhm.
these different sectors of the stock market to see which sector is performing well, on a particular day or the week or the month. And this gives you a good indication sometimes of the direction the stock market is kind of heading. So, I'll let you take this if you want to start looking at this 1 day performance of these different sectors, and
Yeah,
what do you see when you look at this?
yeah. So if we basically look at Finbase, that's one of the resources that we use very well. Um, we can see that 1 day performance. We see communications, if I'm right, really uh, topping, like communication services, top three communication services, consumer, cyclicals or
Hmm.
cyclical, and financials. So we see communication services 1.1%, right?
Yep.
If I'm right, yeah. You click on that information, you see uh,
Oh,
AESE.
yeah.
Um, you also see AHC. Um, that is AH Belloc Communications. You also see
Yeah.
ALX Communications, and it looks like ALX Communication, that is Alaska Communication Systems. They had a very good run in the week. I really like to know more about this
Yeah.
particular
If,
company.
if you want to break down, I mean, yeah, there's a lot of different pages. You could kind of click on this and look at the breakdown of, what's
Oh, okay.
all in this sector if you want to.
So you can
Or
click on, I should click on one of them. Oh, okay. I see it. I see.
yeah,
So let's say the first one, that is AESE Communications. I see there. Let me
Allied
see.
Esports Entertainment.
Where's that? Where's that? I'm trying to figure out where it's
Sorry, they
coming
bringing
from.
up all these pop-ups, but
Yeah.
I mean, that's just kind of good to look at the top three and the bottom
Hmm.
three. So, like, as of Friday, the top three, like you already stated, the top three, but the bottom three is real estate, basic material, and technology. And
Yeah.
it's just 1 day, So 1 day, it might give you a kind of indication, maybe trends are reversing, but you kind of want to look at you can look at the 1 week, the 1 month, or the 3 months. So when you go look at the 1 week,
Hmm.
you can see communication services still at the top. You
Still at the
know,
top. Yes.
yep. Consumer cyclicals and finance kind of got bumped down. Well, finance is still in the top three, but then you see in the bottom three, technology is still at the bottom, healthcare and consumer defensive. But me, I'm big into tech.
I'm
So
also
you
big
can,
into tech, man.
yeah.
I like tech too.
And so for those who probably invested in tech, you probably shouldn't worry right now, even though we've been in the bottom three in the last day, in the last week. But in the last month, we're still in the middle. And then in the last 3 months, we're in the top three. And, half a year, still at the top. And in 1 year, we're at the top. But, you like I say, you kind of look at this to see if it's like some trends are reversing. You kind of see trends reversing just a little bit. You can see energy picking up a little bit because energy has been beaten down this year because of the transition from fossil fuel to alternative energies. But that doesn't mean all of a sudden energy is going to come back. But when you kind of look at this, just kind of being in the know, just being in the know. So once, maybe some major things might change, like Biden might become president, and some of these things might go from trending down to trending down to trending up, and you might want to change up your investment portfolio. So that's kind of why we look at
Yeah.
this.
So for trends like this, or for performance like this, um how does it really help somebody that is into day trading? Even I know we are not talking about that
Okay.
yet, but um, let's say, what do they really look at? Are they going to, somebody who's into day trading and probably uh, not swing trading or maybe long term investment? Do they
So if
only
you
look at the day relative performance only?
so if you're looking at day trading, you can kind of put this together. Um, so I will look at maybe the 1 day, the 1 week, or even maybe even the 1 month. But probably I will focus on this 1 week. And so if I know a lot of communication services sectors are being boosted of energy, So when you click on home, so these are usually the stocks that I day trade only because they have high volume, and because there's high volume, there's high volatility. So if there's high volatility, I'm trying to day trade, a stock might go, as you can see, this one went up 75%. So if I catch it when it's up 50%, there's a potential another 25% gain. And so if I'm looking at those maps and I see communication services is booming, but then I start seeing some of these stocks and I click on them and I realize maybe they're in the communication sector, then that gives me a good indication like, okay, maybe I should day trade this stock.
Okay.
If that kind of makes sense, because if I'm hovering over some of these, like this Remark Holdings, internet content and information, that's probably related to communications, but this is a software company right here. So it went up 62% that day. So I don't know. Sometimes you kind of just see trends, and if anything, about the stock market, it likes trends and information. And so once you see one sector trending up, a lot of people pour a lot of money into it, and it'll spike temporarily. And yeah, if you time it right, yeah, you can make some money. So now that we looked at kind of the groups, you can kind of look at the maps. And if you remember, there was when we looked at these groups in the last week, communication services and energies were up. So when you go look at this map, you can kind of look at some of the energy companies, which should be right around here. And you kind of go look at them and see their performance over the last few days. And those two should correlate together. And you can see, okay, energy is going up. Let me look at some of these energy stocks and maybe think about potentially investing in those. So that's kind of how that works. But since we kind of covered that, now let's get on to the main reason why we're on the call today. So that's just kind of like some introduction info we always put out there. It's kind of like an FYI. So tell me when you see my screen change. There we go. Can you see that?
Yeah. Why should I invest in stocks? Yeah, see that clearly.
All right. So if I just asked you off the top of your head, Kaiser, like if somebody just asked you, like, man, why do you invest in stocks? What would you say?
For me, I see it as ways of making side money apart from my job that I do. So a side hustle is very, very important. Every side hustle is a good hustle, So a way of making money, free money. Let me put it that way, free money. Because if I should put in 100 and by a month or two it goes up to 200, that's free money for you. Number two, also it's a way of buying back your freedom.
Oh yeah.
Buying back your freedom, because I know people that I see people online and stuff like that do some of these things full time, and it kind of give them that knowledge. So knowledge to keep on doing what they are doing, and they're kind of better at it. I'm trying to see if I can get to that point of, doing that too, maybe one day, if it's very necessary. Yeah. So buying back your time, buying back your freedom, side money, and maybe probably the next one is making your money work for you when you are asleep. when you are asleep. So those are some of the few reasons why I would tell somebody to go into the stock market.
All those are great reasons. They kind of go hand in hand of some of the reasons I have. So like you see, the first bullet point I have is like money sitting in cash will lose its value over time. So if anybody knows about inflation, that the cost of goods rise over time. Something that you paid. I always use gum, for example. And it's kind of sad because when I was growing up, my father used to always tell me stories of when they could go in a store and buy gum for a penny. And now here I am, 20 years later, talking about when you could buy gum for like 20 cents. And now in most places you go, gum is $1, $2 or something like that. It's rare that you see those 25-cent pack of gums. You might see it for 30 cents here and there, but usually gum is like $1, $2, and that's a significant jump if you really think about it. You go from 25 cents to $1 or $2, like that's a huge percentage gain. But
Yeah.
so if you would have just kept your money like sitting in cash, over time, that same money is not worth as much in the future. So that's one good reason to invest in money. I mean, invest in the stock market. Two is a reason most people know. It's for retirement. We all want to get to an age where we can retire, and like you say, we have money to maintain our lifestyle that we've been living for a long period of time. And so, yeah, people invest in it for retirement. And the last two, I think you hinted on this one, is investing to grow your money. You always want your money working for you. Like if it's under the mattress, yeah, if you have $100 today, it's going to be $100 tomorrow. But if you invest in the stock market, especially if you pick good companies and good stocks, the average return is like 10%. So your money would be working for you. It could grow anywhere from 7 to 10% per year. So kind of like you hinted, why you actually at your 9 to 5, your money is working for you via stocks.
Yeah.
While you're asleep, your money is why we having this conversation. Our money is working for us. And the last one is something very important that we're going to talk about maybe in 2 or 3 episodes, but the power of compounding. Once you learn how money is compounded, especially in investing in stocks, compounding is like the eighth wonder of the world. It's this beautiful thing. Once it starts to snowball over time, you really can make a lot of money. So these are all great points of why you should invest in stock market, and people really need to consider this before they invest, so they can have the right mindset.
Mhm.
So I don't know if there's anything else you want to cover on that one.
Yeah. So you mean what we just discussed, or why you need to invest?
Hmm.
Yeah. So if we're still on the subject of why you need to invest, I think there are a lot of things around us that most of the time we kind of look out for. I posted a picture recently on my WhatsApp status, and I showed people the price of a new iPhone.
Okay.
Okay, a new iPhone now, like the iPhone 12 and the 12 Pro. Okay, and I alongside that, I also put the price of the stock of Apple also there. you know, and
Yeah.
I was uh, a friend asked me what am I trying to explain, but he's not really getting it. And I'm like, yeah, what I'm trying to get you to understand is, so far as you like the product and you like using the product, don't forget investing also in the product, because for most of the time, uh, the the stock price is way cheaper than the product itself. That's what people don't know. If you go to Louis Vuitton now, I have entered into a few of their stores, and I have conversations with some of their staffs, and we talk, and they're like, yeah, it's a very good company that they like to invest in, you know. And when
Hmm.
you ask them, they tell you they own just few of Louis Vuitton products, but they have more money of that in the stock market, you know. So whilst you use the iPhone, I have an iPad, I have a MacBook, I have an iPhone, I have an AirPod, I have, I'm surrounded with Apple related stuff. Not just because probably I have my 9 to 5 there, but I see it as one, it's a great company. Two, it offers great products. Three, it has good leadership. Tim Cook is a very good leader, leading the company in the direction that it's supposed to go well. But me as an individual, I may not be earning probably enough there, but the only way that I can really make money out of there is buying stocks. Because for that, nobody can limit me. You know, you you can't be limited. If you buy a lot of stocks and the stock goes up, that is free money for you. Um, it's way important than just buying the product and using it. So my point basically is, as we use products around us, you go to the Walmart, you go to the Gucci store, you go to
Gucci.
all those places.
Yeah.
Make sure. For example, I think LVMH is
Hmm.
that of Louis Vuitton, right?
Yep.
Let me know if I'm
Louis Vuitton, Moet Hennessy. Yeah.
good. Yeah. So you enjoy all those class of things. Make sure you have money somewhere so that you got a way of owning an aspect of the company too, So sometimes it can be the basic things that you'll be surprised that are on the stock market. That's every now and then you have it or you buy them. So
Yep.
that is a very good way of making your money. Yeah.
So who's going to cover this? Yeah, this is coming to, I always talk about investing things that you know or that you use all the time. And since you already hinted on it, I'll just give them kind of a preview. Like you gave some very good examples. So kind of like Apple, right? If you're going to buy how much is the new iPhone? Like $1,000, $1,200 or something
Yeah.
like.
So when you're going for the pros, you're looking at 999. So let's say
Okay.
1,000.
Okay. So think most people don't, for $1,000, right? If you don't buy the iPhone, or let's just say you buy the iPhone, but then you take another 1,000 and you invest in Apple, using the same information we have on the screen right now, how stocks, usually provide a return of 7 to 10%. The average is right at 9.8. So let's say you hit this average every year, you get a 10% return. Your 10% return on $1,000 for that iPhone is like $100 a month, and that's going to grow over time. I mean, $100 a year. Sorry, not a month. And that's going to grow over time to the point where in a matter of years, that initial $1,000 that you invested in Apple can either pay for your Apple cell phone bill every month, or it eventually get to the point where it might could buy your iPhone every year.
Yeah.
That's one example. Or example I gave my nephew, he loves buying Nikes, Jordans, LeBrons. So I'm like, hey, that's great. But if you invest in that same company, eventually it get to the point where your investment will buy you Nikes, like 1 or 2 pair of Nike shoes per year.
Yeah.
And you never have to put
That's
any money in there ever again. And it just keeps compounding, and growing to the point where your money's working for you and pretty much you're getting this product or this service for free.
yeah. Is a company like Timberland on the stock market?
I don't know if Timberland, it depends who owned them. I don't know if Nike owned
Yeah.
them, but I don't know. I have to look that one up. You definitely
Okay.
can invest in Nike. Um, or like AT&T. I know a lot of people who use AT&T for their internet service provider or cell phone provider, and their stock is only like $28 a share, and their dividends is like 6 or 7%. So
Wow.
you could definitely buy that stock, and eventually it'd be paying your cell phone bill.
That's true. That's very true. Yeah.
So next we're going to talk about, okay, so we talked about the mindset to invest. We just covered some other things of why you should invest, but a lot of people are always scared because if the market, it's kind of ironic, if the market is going up, people feel like, oh, the market's doing great, it's a great time to invest. But when it's going down, for some reason, people think it's a terrible time to invest, and they're always kind of nervous and scared. It's kind of like, for some reason, when the stock market is on sale, people don't want to buy. If there's a sale at Macy's or Dillard's or even Apple or Amazon, people flock to it. But when stocks on sale, people kind of get afraid. And so the question that people always ask is, hey, man, is this a good time to invest? And if anybody ever asks me that question, my answer is always going to be yes, 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 no matter how good the market or the economy is doing. And one of the reasons why is because several companies perform well during bad markets. And I just got a few of them up here. And so I'm going to click on Walmart, and that should take me to a link. Let me know when you can see it.
Yeah. I can see it now.
Okay.
Yahoo Finance,
So
Walmart,
we're
Yahoo
looking at
Finance. Yeah.
Walmart. And it's important to always kind of look at these charts. A lot of people are intimidated by charts, but it's just data just showing
I
up
used
in
to. That is
the
one of
market.
the things that really scared me out of. I kind of watch and I'm like, what is all these things? Like, when am I
Yeah,
going to understand this? And but I didn't know that it wasn't that complicated. It was like
it's pretty
on
simple.
it easy.
Yeah, like if I start putting all kind of indicators and stuff on here, it's like, man, it's just a bunch of lines. But when you just look at it in the simplest form, all right, you can see, okay, this 1 day performance of this stock. You can see it opened at $143.84, and it closed at $143.85. So it went up 1 penny or
Mhm.
0.21%, right? So then when you go look the 5-day chart, it was at 145 and now it's at 143. So it kind of went down. So if you was going to invest in Walmart in the last 5 days, you might say, hey man, it's going down. Why should I invest in it? Well, you might want to back out of time just a little bit more and go look at the 1-month chart. When you look at the 1-month chart, it's like, oh wow, it went from 136 to 143. So it went up. When you look at the 6-month chart, the same thing, it went from 128 to 144. And then even when you look at this year to date, it went from 116 to 143. And if you just look at the last year, it should be about the same thing, 119 to 144. So what is the point that I'm trying to make? The point I'm trying to make is there's always a good time to invest if you buy the right stock or if you allow time to work for you. One of the things that I always keep in mind is this motto from Warren Buffett when he says the stock market is nothing but a device from transferring the wealth from the impatient to the patient. So if you're willing to be patient, and in time, all stocks go up. And that's for a lot of these other good stocks. So like what else did I have up here? I think I had Kroger, right? So here's another thing. If you don't know the stock ticker, a lot of times you can just type the company name in here and bam, there it goes for you. So Kroger is KR. And so the same thing, let's just look at the 1-month chart. So the 1-month chart, you can see, okay, it went from 33 to 32, so it went down. Then you look at the 6-month, 6-month is kind of about even, but then you look at the year to date, 28 to 32, it's went up. And then even if you look at the 5-year, this 5 years kind of went down, but if you look at the max, it should be up, right? So time, it went from $1. Well, that's kind of back in 1978, but if you go to like the 2000, right? 2003 is at $6 and now it's at 33. So sometimes you need to back out a little bit and kind of look at it. But as you can see, that it's always a good time to invest. Sometimes it just takes a little bit more patience. And speaking of AT&T, we were just talking to AT&T. Let's just look at this one. Now this is a different type of stock, but notice when I was talking about that dividend, right? I could invest in AT&T, and over time it could pay your bills. Imagine, spending $30 and getting a 7.5% return. That's basically what you're getting. We're going to talk about this in a second when we start talking about banks, but this stock.
I think one of the things that I would really like you to explain for people to know is, when the way you've opened Yahoo Finance.
Yes.
We have previous closed, open, bid, ask, day range, like all the way to 1-year target, like people to understand, because sometimes you see all these plenty numbers in front of you and you're like, what am I looking at? What is this? What does that mean? And all that. But if you grasp at least an idea of what all this data represents, anytime you open Yahoo Finance yourself, you know what you are dealing with. It really helps you, So maybe at a point, maybe either today or maybe one of the days, we can go into the terms there and try and explain it to people also, so that they can really get us. Yeah.
Yeah, that's a good point. Yeah, it can be intimidating, but once you realize like what it is, it's just simple. And and I cover 30 seconds of it, but just know like this previous close is just okay. When the market last closed on Friday, what did it close at? It closed at $28.28. When it opened the next day, what did it open at? It opened at $28.35. It's like, oh, that's it. Yeah, that's what that means, right? And kind of like this bid and ask, what does this mean? Think of it as like an auction, right? If you go to an auction, one person say, okay, we're going to sell this for $1. Somebody says, I'll give you $1.15. Another say $1.30. Well, that's kind of like what this bid and ask is. Like, you have something I'm trying to buy. Okay, I'll give you $27.77 for it. The person who owns it say, no, the least I'm willing to accept is $27.82. And so it's a battle, between what I'm willing to pay versus what you're willing to accept until we come to an agreed upon price. And that's kind of how that works. And you can see, it was trading at $27.82. So whoever was bidding $27.77 had to increase their price by like 5 cents, So yeah, once you start looking at it like that, it's pretty simple. Most of this stuff is pretty simple. This could be a little confusing, but yeah, we'll do a video on that one. So
Yeah, sure. That's cool.
All right, so this is the meat of it, what we really want to discuss today. Not only why you should invest or it's a good time to invest. A lot of people put their money in the bank. I know when I was growing up, my father put his money in the bank, his parents put their money in the bank, and that's what we kind of all knew. You put your money in the bank, not only is it safe, that it should provide some type of return for you. I don't know, is that the way you were raised? You know, put your money in the bank?
Mm-hmm.
Okay.
Save, put your money in the bank, keep on putting it in the bank, keep on saving. For me, I was raised from like, just keep saving, save because one day you need
Yep.
to withdraw to use it, you know,
Yep.
save because yeah. So I was more of the saving type, like save because one day you use to withdraw to use it, like, you
That's what
know,
my parents told me.
that kind of
Save for a rainy
thing.
day. Save for a rainy
Save
day.
for a rainy day, yeah.
But then they told you put your money in the bank because you thought the bank was making you money. And nobody ever questioned this method. You know, we just blindly followed this rules that our parents did. But what people don't know, what I had to learn, is that the banks don't provide that type of return anymore. If you go look at, you know, maybe 20, 30, 40 years ago, people were receiving 10 or 15% interest on the money that they put in the bank, which is a lot of money. So it was a great interest rate. I would love to put 10,000 in there and make $1,000 in interest, or 1,500, but that's no longer the case. Most bank interest rates, I think the average is about 0.05 and 0.07. If you're lucky, you might get 0.1. So anybody who's watching this video, I always challenge you, don't listen to me, go look for yourself. Don't listen to us, go look for yourself. Go look at what your bank interest rate is right now. So the great thing about this chart is, they're all, sorry, they're all clickable links. And so this clickable link, you can go actually look this up, and this is updated as of today. You can see all the high yielding savings account as of October, right? So you don't have to guess, it's all right here. And the highest yield account savings is this bank I never heard of, but it's
Me too, man.
0.8%.
I've never heard of that.
More than likely, that's a online bank. Don't have a brick and mortar, because yeah, that's how they provide these, what we deem high interest rates. But 0.8%, think about that. Let's just do this math real quick. Now, if you had $1 million, if you was to loan somebody $1 million, hey man, let me borrow $1 million. Okay, cool. If I loan you $1 million, you know, you got to pay me back more than $1 million. I would think at least, I don't know, maybe give me another 5, 10, 15,000 on top of the mill. But if you put $1 million into this bank and you add what, 0.8%? Let's see here, 0.8%. I'm gonna give you $8,000. Is that right? Let's make sure.
Let's make sure. Yeah.
Plus 0.8%. But what? And that's Salem Bank. But we were just looking at, let me just type in Bank of America. And all this is gonna make sense in 1 second, right? So would you rather put your money in a high interest savings account and earn 0.8%, or invest in the bank and get 2.89%? So you actually have a choice between receiving that 0.8% or plus, I think I did that wrong, or get 29,000. So let me just break this down a little bit further. All right. So we said the average is 0.1, and we just looked at one that, what was it, like 0.8? Sorry, I had way too many tabs open, So the highest is 0.8, and I think the lowest is 0.6%. And that is for a high yield online savings account. Let's go back to the slide, right? But what most people don't know is, what's the average inflation rate? Average inflation rate, and that's why I have this chart. You could go back and look at the historical inflation rate over time. But the average inflation rate at the time that I did the slideshow was 2.5%. So even if you have the highest interest rate of this 0.8%, if inflation is 2.5%, or even if it's 2%, what does that tell you? It tells you that you're
Even if
losing money by putting it in
you're
the bank.
losing money, yeah. Once the money in the bank, you're losing money.
So that's why we talked about earlier how the cost of goods keeps rising. You know, nobody really pays attention. They just say, "Oh man, gum is $1 now. Okay, here's $1." You know, but nobody's paying attention. It's like, okay, your interest rates are staying the same, but inflation is rising or consistently at the same amount that you're losing money. And that's why I have this little footnote that if you put $100 in a savings account that pays 1% interest rate, after a year you have $101. But based on inflation, you need $102 to buy what $101 would about the previous year. So
Mm.
long as you keep putting money in the bank, that you're actually losing money, and that sucks. That sucks.
Yeah,
And that
that really sucks a lot.
and let me tell you what that don't account for, Kaiser. That does not account for any bank fees that the bank applies. So those overdraft fees. So think about it. If you had $100 in there, and all you're gonna do is make $1 in a whole year, and just one day you get this overdraft fee of $30. Well, damn, like you just took away my whole dollar for the year. Not only that, now I owe
Only
you
that
$33.
I owe you $33 to like extra, like So it's more or less like you're gonna work back for the bank again.
And using this math is gonna take me another 33 years before I can pay back that $33 that you took out of my bank account for that overdraft. And why did you take it out? Because you knew I didn't have it.
Man, it's not a good thing. It's not a good thing at all. And I was having a chat with a friend recently, and he works in a bank, and he was telling me most of these banks that we put our money is there to we save our money is there. Uh, they trade with the bank. They trade with the monies.
Right.
You know, yeah, they trade with your monies. They loan your monies to other banks. They loan your monies to other people. And let's say if you're going back to loan the money from the bank, that same bank, they give you a higher interest rate than what they even give you on your money, whilst your money was in a savings account. So in the long run, it's like you are rather working for them.
Yes. Yeah, you're because I never thought about this as a child, but when somebody explained it to me, it's like, think about it. What product does the bank actually own, or what service? Like, if we did not deposit our money into the bank, like what's the whole purpose? And once you learn that a bank is nothing without customers like myself and you putting money in the bank, that's the only way that they operate. Because banks don't put their own money and just start loaning it out. They take my money and your money and they loan about 80 to 90% of it out. And that's what we finna cover right now. 80 to 90% of your money to other people, and they only keep about 10% of your money in the bank. So when you go to the ATM to withdraw it, hey, there's money in there. When you pay bills, the money is in there. But they actually leverage your money in order to make them more money
Yeah.
and to give you less. And that's exactly what we're going to cover right now. So when we click on this link, I don't know why it keeps doing that, but so I bank with Bank of America. No particular reason. It's just that was my first bank account, and I just kind of stuck with them. I just really did. So let's just look at their rates, right? And why is this so big? Oh, that's why. All right, I always blow this up so everybody can see it, right? And so, like we were just saying, like, so that online bank we just looked at 0.8%, that's actually pretty high because I have a platinum account, and so I have 0.05%. So that kind of sucks, right?
Mm-hmm.
0.05%. So if I have $1 million, I'm not gonna get that 8,000. I'm gonna get $500. Like, why would I put $1 million in there and only make $500 in interest rates? It's like That's just crazy.
That
But
is that is way crazy.
that's crazy. Like I wouldn't even loan a friend 5,000 and he just paid me back 500. Well, maybe 5,000. Let's say I loan him 50,000. You need to pay me more than $500, back in interest, you
Yeah.
know. But so but that's why we was discussing that banks, they're not in the business anymore to provide you with a great interest rate. Their business is to leverage your money in order to make them money. And so now that we know that, I'm going to click on something. Let me just close some of these links, right? Click on something else that should be able to show you how they leverage your money. And then in a second, we're going to discuss how you can leverage your own money. So remember, we just showed you that, me putting my money in, they're only going to pay me 0.05%. But if I go to that same bank that I just put $1 million in and say, hey, I would like to borrow money to buy a house. Well, they're going to charge me anywhere from 2.1% to about what, probably about 2.9% in interest rate.
2.9%. Yeah.
So what does that tell you? That should tell you a few things like, okay, you're using my money to make money because that's why you're
Yeah.
only paying me 0.05. But if I come back to you to borrow my own money or somebody else come back into to borrow money, um, the rate is so much higher. And not only that, let's just look at this, right? So let's just say let's just choose this 2.75, right? Yeah. So remember, they were paying me 0.05. What kind of percentage gain is that? That's a 5,400% percentage gain in interest rate.
Hmm.
That's crazy.
That's a
Why would
lot.
5,400%? Sometimes you gotta let that soak in. That's crazy. That's a astronomical number, right? So
That's a lot.
I mean that's just for mortgage rates, right?
Yeah.
So let's look at some other things. Let's look at the auto loans, right? So if I go back to them and say, okay, I'm trying to get a car, same thing,
Hmm.
anywhere from 2.5 to about 3.4 if you refinance. All right, cool. You're only paying me
Hmm.
0.05, but you're making 2.5 or 3.49, right? And then the
Yeah.
same thing with the credit cards. When you look at the credit cards, that's just crazy because when you look at credit cards, where is it at? Um, right
I
here.
saw some 3% up there.
You know how
Okay, let
credit
me see.
cards get, it
14
could go
point,
from 14 point, might as well say 15% to 23%.
23%.
So you got to keep going back to that original number. Like, wow, I got $1 million in here. You're only paying me 0.05%, which is 500. But you're going to loan my $1 million out multiple times to multiple people, especially if they have a credit card, and charge them anywhere from 15 to 23%. But all I could get back is $500 per year.
Nah.
Like, wow, you're doing a great job at leveraging my money.
Yeah. They're
A
really
very good
leveraging the
job.
money too. Yeah.
So you got to ask yourself, okay, man, well, how do I leverage my own money? And that's the whole purpose of
That's a
this.
big, yeah, that's the big question. Like, how do you leverage your own money so that you can make money out of, or let your money work for you. So at least you've broken it down very well for people that sometimes sometimes we walk into the bank back and forth and we don't think about some of these things.
No.
Like we don't think about some of these things until you get somebody to do a breakdown for you, then you get to know. So that was a very powerful presentation there. Yeah.
So that's why I have this link right here. It's going to take me to Bank of America, but since I think I already have one open, right? And so the answer is pretty simple. Instead of putting majority of your money in the bank for saving, thinking it's going to grow, me personally, I only have enough money in my bank to pay my bills and maybe $100 or $200, for miscellaneous things that
Mhm.
arise. A lot of times I don't have any money in my bank. I be broke, and my friends laugh. I'm like, "How are you broke?" Like I have money, it's just in my investment account, and I don't want to sell stock, just to buy something, So a lot of times I'm broke or whatever, and the reason is because instead of putting money in Bank of America, it'd be better to invest in Bank of America. And that kind of hints on what you were saying about explaining this side right here. Because Bank of America is one of those stocks that actually pays a dividend. And if you don't know what a dividend is basically paying you a bonus for investing in a company. So basically, Bank of America say, hey, by investing in my company, now you're part owner of the company. So when we make a profit, since you're a part owner, we're going to share our profits with you in the form of a dividend or bonus check. And so basically, for those who don't know, if you want to own one share of Bank of America, it costs $24.90. That's what this is right here. So,
Mhm.
so let's just use this math, right? So let's just say, give me a number, Kaiser. How much money? Let's say you had some money you was going to invest in the bank. How
So
much you
let's
think
say you,
somebody put in a savings account?
so let's say you have $2,000.
Okay, $2,000, right? So you have $2,000. So you know, since the interest rate is 0.05, that if you keep your money in there for a year, uh, that you're gonna make $1 in interest, right? Your $2,000. Maybe make sure I did that right. 2,000 plus 0.05% equals $1. All right. Yep. So if you put it in Bank of America savings account, if you get the platinum, you're gonna get 0.05. You make $1. Cool. Well, what if you invested in Bank of America? So at $2,000, you know that their stock is $24.90 a share. So 24.9, right? So you're gonna
Mhm.
own roughly 80 shares.
80 shares, yes.
80 shares. So right here, this forward dividend 0.72. Basically, this is saying for every share of Bank of America that you own, they're gonna pay you 72 cents per share per year in form
Okay.
of a dividend. So you know you own 80 shares because you had $2,000 and yeah, you bought and they're $25 each. You bought
Mhm.
80 shares. So times 72 cents, you're gonna make $57.60 every year for own Bank of America stock. So you gotta ask yourself,
Com-
you want the dollar or you want
compared
the
to the one.
$57?
Oh my God. So compared to the $1, so it's either you want $1, you want 57, right?
Mhm. But here's the cool thing about this, like they pay it out in quarterly, so every 3 months.
Mhm.
So every 3 months, you're gonna get a check for $14.40.
$14.
So the cool thing about that $14.40, you have options, you know. Let's say
Mhm.
instead of 2,000, you put in 2 million. So you multiply this number, and I don't know, that's probably like, let's say $1,400 every 3 months. You could take this $1,400 and live off of it. So let's say you retire, you had 2 million. It's like, you know what? My $2 million is not changing, right? Because the stock is still $24.90, but I'm getting this dividend or this bonus check every 3 months. I want to live off of this. So you can pay your bills, you can live off of it, or you can say, you know what? I don't need that $1,400 every 3 months. Instead of them sending me a check, I want them to buy me more stock in the company. And so, using that same theory, if they bought you more stock in the company, so that 57.6 divided by what is it, 24.9, that's how much the stock cost. Every year, your dividends are going to buy you 2 additional shares.
2 additional shares.
So next year you got 82 shares. All right. You haven't
Mhm.
even put any more money in besides your original 2,000. But now next year, because of your dividends, you got 82 shares, right? And now instead of $57, you got $59. And every year, because of compound interest, it just keeps growing and growing and growing and growing. And it never
Mm,
stops. So
that's
that
interesting.
is how, and I think that's the last slide. Yes, last slide of the day. That
Okay.
is how you leverage your money as opposed to letting banks leverage your money for you.
Your money. You see, so that's like a simple calculation there for those of you listening to or watching us. You can see right there forward dividend and yield that is 0.72%.
Hmm.
Comparing that to the percentage that your bank gives you. Maybe look at your bank and just do that basic calculation that we did so that you can compare both of them and see who earns you kind of more. Yeah, let's do Wells Fargo finally. Then we can end today's section.
Yep.
Today's session. Yeah.
Because people say, well, is that just Bank of America? No, go look at any bank. So same thing with Wells Fargo, 2,000 divided by the 23.28. You own roughly 86 shares. So 86 times is 0.4, $34. Now, I don't know the interest rate of Wells Fargo, but I could pretty much guarantee you it's probably pretty close to Bank of America. But you know what?
Yeah.
Why are we guessing? Let's just go find out ourselves. Wells Fargo. All right, Wells Fargo, where would your rates be at?
Let me see if I can just
There we
calculate
go.
it.
All right. Let's look at their platinum savings. Offer the higher rates with higher balances. All right. There you go.
There you go.
0.01.
0.01%.
All right. So 2,000 plus 0.01% equals, what is that, 20 cents? Yeah, get 20 cents.
Yeah, 20 cents.
So you want 20 cents or you want that $34? So
this is scary.
it's very scary. It's very scary for those who are uneducated, who are not in the know, and they don't realize how they're being nickel and dime every single day because you trust the banks. You just, for some reason, you just trust the banks, right? It's just, I put it in the bank, it's safe, and it is safe. You know, nobody's, it's not like putting it under your mattress. You come home, somebody broken in your home. It's going to always be in the bank, but it's slowly trickling down, and that's something people don't know.
Yeah.
And yeah, it's very scary, especially for those, like I say, those who getting hit with savings account fees, overdraft fees, ATM withdrawal fees. That dollar here, that dollar there is just slowly eating away at your money when your money could be working for you. So, we could just end this off. It's kind of like something that you highlighted earlier, how you want your money to always be working for you, because people work hard for their money. I know I work hard for my money. I know you work hard for your money. But while you at work, you can't make any other money, right? Because
Yeah.
you're at your 8 to 5. And when you get off of work, you're usually tired. Some people have part-time jobs to kind of provide some other income, but investment could be another form of income as well. And yeah, you can actually make your money work for you, which is a beautiful thing.
I think beyond it being a beautiful thing, it's a good thing to do. It's a good thing to do. For most of the time, you starting is the problem. You know, people starting is the problem. Like, are you ready to? And we are not saying start with $1 million or start with $100 million. If you can start with the $50 that you can start with the little that you can. You'll be surprised with this very simple analysis that we just did with the banks. You'll be surprised how much you'll be putting together, And for me, it's another light being thrown on me. Like, when we have something that we call turning on the light bulbs, like for you, like comparing the bank's interest rate and the dividends that their shares give you, And I had a friend that I was laughing at recently. He opened his bank account and I saw 36,000 US dollars,
Yeah.
and and I was like, "What is your bank interest rate?" And he mentioned it, and I checked how much he got like in a year.
Yeah.
I think it was why have I forgotten this figure? Like in a year, it was something small, like really small. So I was like, bro, like you work hard for your money, you go put your money there,
Yep.
and They are using your money. If you want a loan, they give your own money back to you with a higher
Your money.
interest rate.
Yeah.
Your own money back to you,
Hmm.
the higher interest rate. Why not diversify? Like have some money in the bank. We are not saying don't save, but
Hmm.
let the money rather work for you at a very good rate, you know. And after sitting down with him and explaining some few things, he was like, I really need to consider this. I'm like, this is not something for you to consider. You need to do it. It's going to help you. Like, you know. So um, thank you so much for this insight, for this explanation. I just hope people really learned something from it. Yeah.
I'll leave off with this because, like you said, a lot of people are kind of reluctant or scared to put their money in a brokerage account because they don't understand how it works. And I would just tell anybody that who's kind of reluctant, it works very similar to a bank account. Um, just because you put money in your brokerage account, you don't have to buy stock. It could actually sit there and earn interest, actually more interest than your bank account pays until you decide what stocks you want to invest in. So it's the equivalent of having a bank account, but you could invest in stocks. And
Mhm.
another concern people have is like, well, what if I want to take my money out? Well, there's two options. I always have money invested in stock. So if I want to take money out of the stock, I have to sell that stock. You can sell the stock in literally in a minute. So once I sell that stock, I can usually get my money out in about 3 days. But I also don't have all my money invested in stock. Some is sitting in cash in my brokerage account. And that's for when I need emergency money. So literally right now, if I needed $1,000, I could go and transfer $1,000 from my account right now, and it'd be in my personal account, my Bank of America account, Tuesday morning. So one day. And a lot of people are afraid. Well, what if I need my money right away? Can you wait 24 hours? If you wait 24 hours, yeah, you can have your money right away. So, if that's one of the
Yeah.
reasons, you could wipe that reason off as well. So,
Yeah. So that's a very good section to end with. At least know what your how your money is doing for you. Understand, apart from knowing, understand your savings account very well, and do yourself some good, helping your money to grow for you. Yeah.
of course. So, all right, bear with me for a second. I am going to stop sharing. All right, cool. Yeah. All right, cool. All right, how long do we go today? We've been on for like an hour. All right, cool.
An hour?
Time goes by fast, brother. I keep telling you, it's been about an hour. Yes, what is 8:05? So
Wow.
yeah,
An hour. Okay. It's good. At least we are sticking to just an hour. At least 45 to an hour. It's I think it's very important. Like very very necessary. So um gradually would for me I think 45 to an hour is okay. Like
yeah.
yeah,
And anything more than that is just too much information. You kind of lose
yeah.
people, and it's just like, what did you say? So just know, as we was discussing earlier, as the audience grows, we'll start going to Instagram Live after some of these YouTube videos, just for people
Hmm.
who have questions, because it's going
Yeah,
to be a lot of questions out there. So
yeah. I know Instagram normally um people will really jump there, and I think it will be good. So far as what I'll be doing is okay. So what we can do is when we decide to jump on Instagram, since we're doing all the um, personal questions and stuff like that, I'll be doing the questions that the people put in the chat, like that kind of a thing,
yeah,
so that you can help with answering that and all that.
because I know
Yeah,
people have specific questions like, what about this stock? What do you think about this stock?
yeah,
What's a good price to buy? What's a good price to sell? What's a
yeah.
good
So
stock you looking at?
uh, unless you want to do that, if not, we probably like to do away with dealing with individual stocks. And I don't know whether you like to go that route.
Yeah, whatever they want to ask. Usually YouTube is kind of more geared towards a specific topic, but once we go to Instagram Live, it's no holds barred. Whatever you want to ask, it doesn't matter. You can ask about day trading, swing trading. You want to learn about IPOs, SPACs, whatever. If I know the answer, I'll tell you. If I don't, I either do some research and get back to you, or I go talk to my mentor and see if I know.
Simple.
He
Yeah.
knows.
Yeah.
Cool,
Okay,
good.
bro.
It's
Thank you
being
so
real.
much. How was your trip?
I was good, man. I just went with a friend. He moved to Houston or whatever, to Bumble, Houston. I think that's the name of it. And I just Humble, not Bumble. And I just
Humble.
went with him.
Oh, okay. So like you helped him pack there or what?
Really just riding with him so he wouldn't be bored. Like I told him, I don't do movement, man. Like I hate moving. I hire people to move. So I just rode with him to Houston and back and
Yeah,
just hung out there a day.
that's movement is really some way. I kind of have my what